My name is Judd, and tonight we have a class. It's the beginning class in our semester. We're going to talk a little bit about the accounting profession, and in particular we're going to talk about the double entry accounting system. A double entry accounting system takes one debit, one credit. We're going to learn tonight about how this system requires accountants to self-balance. What's important about this is that this double entry accounting system allows businesses to create very complicated financial statements and allows investors to have confidence that they aren't leaving something out. Every entry, every financial transaction will have at least one debit and at least one credit. There might be 3 pages of debits and 7 pages of credits, but there will always be at least one. And the debits will equal the credits. Many accountants have many jokes about whether you will debit on the left, credit on the right. Some say you debit on the side by the window, credit on the side by the door. But here is an example of one of those accounting entries. For example, right here, in this entry, one account is debited and one account is credited. As you add 100 debit and 100 credit, think of one of these as a negative number. And when you do, you will see that it will balance. Now what we're going to do is just look at a couple of examples of other real entries that a business might make. Let's say that you are a photographer. You charge your customer $100. The financial statement entry that you make for that is to debit cash. You now have $100 in your pocket, or you put it in your bank account, and you have a $100 sale, and you credit that. During this semester, we're going to learn about debits and credits and which side of a ledger they'll be on. Let's look at one other example right now of sales and accounts receivables. Let's say that you are now that photographer. You become a lot better at your art, and you charge them $1,000, but not cash, but rather $1,000 that you will collect in 30 days. When you do that financial transaction, once you have earned the money, you will debit accounts receivable for $1,000, and you will credit sales, the same sales you had before. This $1,000 is the ability to receive $1,000 in 30 days. Now guess what you'll do in 30 days? You'll collect that money, and when you do, the transaction that you will record will be this: the collection of cash, an increase in cash, and a reduction of that account receivable. Take a look at it just for a second and see what happens to this account receivable. There's $1,000 in debits, $1,000 in credits. At the end of that collection, the accounts receivable is 0. In the last 4 entries that we made, we debited cash for $1,100. We increased our cash by $1,100, and we only spent $100. So, Bill, how much will we have left? Right, $1,000. That's right. Very good. How much in sales have we earned during this period, Sherilyn? That's right. We've earned $1,100. At the end of this financial period, there is $1,000 in the bank account that hasn't yet been spent. There is $1,100 in sales that have been made, and $100 in office expenses. You see how it all balances? Very good. Are there any questions? Great. CPAs that do audits sometimes find out of balances that happen when one side of an entry, a debit, is done without a credit. You know, today computerized programs make that very hard to do. They won't let you make a one-sided entry. Finally, double entry systems are used by companies small and large in our city, in our state, and worldwide to keep their financial statements. Why? Because you can have confidence that if the double entry system is used, that they will balance. That is, that you have included everything that affects that company's balance sheet income statement. Are there any questions now? I really look forward to talking to you this semester about filling in the details of these entries. Thank you.